which comes first, the market analysis to find a good place to invest or analyzing a good deal? In other words, if someone in your network presented you a property to buy, would you sign it under contract first, then perform the necessary market analysis during the due diligence period while also running your analysis on the property? So there's a couple of questions here. And then the follow-up to this was, or do you first pick a locality to invest in and then consider deals in that area? A little bit confused on how to start. So that's a great question, James. And one of the things that I would highly recommend you do is always do your market analysis and research up front. And the reason why is because in these larger apartment spaces where you are dealing with larger institutional investors that you're competing with and various things like that, going 100 units or more, then what you're going to want to do is be ready to make that offer. And also, a lot of times in order to compete in the current market today, putting up hard money, basically that earnest money deposit that goes hard day one is rather important and fairly crucial. And so you want to make sure that whenever you put in a contract on something that you're confident with that particular deal, because you might be putting up $100,000, $200,000, or even, on some of our deals, we put over $1 million in as a hard money on the first day. So that we actually put the deal under contract. So you want to make sure that you have your ducks in a row beforehand. So making sure that you actually go into it with the market analysis already done is very important. Now, that doesn't mean that you're not going to continue to do market analysis. So when we get a project or get a particular deal, we already know generally the market and some of the submarkets that we like in a market and where we're going to be looking for deals. When a deal comes through our desk, we're going to look at that deal a little bit closer. And usually there's a couple of weeks on some of these deals that you can really look at to really understand the market or the submarket that it is within a market that you might actually be wanting to go after. And so whenever you go into that particular deal or you're looking at that deal, you're going to look into that submarket a little bit closer, all the way down to as hyper local as you can. For example, tomorrow I'm actually driving up to Raleigh, North Carolina, and myself and one of our other managing partners, Brandon Abbott, will be touring another property in Raleigh, North Carolina that we are looking to acquire. And while we are there, we are also going to shop the comp properties, the competitor properties that are around the property that we want to acquire. And we know Raleigh, we know that submarket, but we also want to be as hyper local to that particular asset as possible. So we use other resources to our benefit, like CoStar and various things like that, and Google Maps, and just research on apartments.com. But we also go and actually put boots on the ground and actually tour the property, no matter what the deal is or where it's located. Unless it's like across the street from where we are, or maybe we're buying one of our competitor properties, obviously we're going to have a lot more knowledge, deeper knowledge about that particular market. So to answer your question, yes, pick the locality or the market that you want to invest in first and know it like the back of your hand, and then start to have those start to look at the deal flow and start underwriting those deals. At the same time, it's hard for me not to be able to stress this at this point, is you want to also make sure that you're always looking for investors, because in the syndication space, you have to have that prior existing relationship with your investors. So you want to make sure that at the same time as finding the next deal and doing market analysis, that you're also looking for investors for your next project as well.